Hi everybody, this is Jay with CassidyInvestments.com with your note tidbit for the week. The note tidbit for this week has to do with doing due diligence. All right, we had a note that came across our desk that we did a preliminary evaluation on, just running the numbers on it, and also taking a look at the property, what the asset looked like, and just looking briefly at the automated valuation systems, Zillow, Redfin, those types of things to get a general ballpark as far as what the valuations were. We submitted, we ran the numbers, it looked good from our numbers, and we submitted a letter of intent, and that was accepted, and obviously that was contingent up on us doing due diligence, getting a BPO, and servicing notes, and all that good stuff, and pay history as well. Well, when we started digging into it further, the deal kind of went south. Title report came back, BPO came back way lower than what the automated systems were showing as far as valuation. The title report that came back, there was about $10,000 of judgments against a borrower that were ahead of the first note. All right, ahead of the first lien position that had not been paid yet. So that obviously nixed the deal. Here's the point though. We spent close to $200, about $175 probably, in doing the due diligence on that. That $175, although I don't like spending the $175 and not getting any return for it, but the return on this was the fact we didn't make a deal that would have been a disastrous one later on down the road. That could very well have cost us $40,000 to $50,000. So the take-home point here is make sure that you always do due diligence before you buy the note. You're doing due diligence on the borrower, you're doing due diligence on the property, on the area, all right, where the property is located. You're doing due diligence on the chain of title and on the assignments. That's all the things that you need to be checking and making sure all the assignments are clean in that respect. So that $175 saved us probably a big pain and a potential loss of $40,000 to $50,000. That's why you do it. So just hopefully you find that helpful. Just a couple quick reminders. Our next Note Talks with Kyle and Jay will be coming here on Tuesday, December 23rd. A little bit different than because Christmas is on Thursday. We're not going to do it on Christmas. But you can sign up for that at Cassidy, C-A-S-S-I-D-Y, investments.com. We talk all things notes. We share deals that we're looking at. We answer your questions. You can bring a deal if you want to get a second opinion on it, a review in that respect. And then we also encourage you to sign up for our quarterly newsletter. You can sign up at our website as well, Cassidy, C-A-S-S-I-D-Y, investments.com. And just for signing up, we'll give you a copy of our book, Be the Bank, An Introduction to Note Investing. All right? You have a fantastic rest of the day, and make sure you always do your due diligence before buying. Catch you later. Bye-bye.